We are live from New York City. Um, if you want to help out, click on this link. It'll take you to YouTube and just hang out there and you can comment there as well. Maybe it's even better looking than here. All right. We've had 3 knocks on the lows of the day, just above lines from yesterday, just below lines from yesterday. You see what I'm saying? Ping pong inside these two zones. One is the red mark, the white mark, and the green one. Those are support from yesterday. We haven't used them yet. We're bouncing off of 560 on the SPY. Then we have the yellow mark, which is also from yesterday. It was a battle zone, the pink scratches up there. I added the box above us. I'm going to delete this box here because it's no longer relevant. This was just one candle, this one. So we can delete that. That was just a visual aid. Now this box is based on that candle right there, which is also inside this. It's not necessary. It's redundant, but it's okay. Amazon credit put spread or Netflix. Yeah, we can do those. Give me a minute. We'll come up with those. Meanwhile, the mega caps are the drag on the market. If you missed it, the visual is easy. You pull up a heat map and you will see that the score is not that bad in this giant box of financials. You see a lot of gray and green, but the market is down 1% just because the big boxes are down a lot. 3, 4, 4. Those are Microsoft 1.4 red. That's a mathematical drag on the index. I believe the market makers are playing around with us in order to get their money back. They've lost a lot of money. They got caught multiple times in the last couple of weeks. Evidence, go back and look at the amount of puts that are in the money, for example. Okay, just to say it plainly. All right. Members, I just sent out a message with how to go along. Say for Google, it's falling off a cliff. Very simple. Somebody's asking, can we do the same for Amazon and Netflix? You can. I'm not as sure about it. Netflix is still in the stratosphere. Amazon isn't. Netflix has not had a serious correction yet. Let's start with Amazon. I'll look at the chart for 1 year. Amazon definitely is inside a support zone, and the zone is wide. It extends through 150. Okay, so let's go back to find minutes here. Let's see if I like it as much as Alphabet. So I'm afraid for Amazon because it's become super large. It's become like Walmart. They employ probably 1.3 million people. And so economies of scale now are different. It's no longer the nimble company that was a never-ending startup. That's how I used to say. This is a perpetual startup company. They keep reinventing themselves. I could do a credit put spread on Amazon. I would do it short term or long term, whichever you want. If we go short term, I could do 170 credit put spread for April 17th. If that goes sour, I would close it and reopen it, do the nuclear punt all the way up to the end of the year. If I have a lot of trades for April 17th, plus or minus a week, I would not do that. Okay. I don't want to be long stocks into their earnings. The expectations are through the roof still. Even in this room, the expectations are still healthy. So I'm not criticizing. The expectations are still healthy, so there's still room for disappointment. And disappointment brings unreasonable selling if it triggers. Why am I saying this? Upper right-hand corner of my screen. This tiny chart. This one. It's not so tiny. Whoops. Mathematically, these are like 30% of the S&P, probably 50% of the NASDAQ, if not more. It's these stocks. Apple, Microsoft, Google, Amazon, Meta, Nvidia, and Broadcom. So they're losing Thursday's low. If they lose Monday's low, or yeah, Monday's low, last Monday, that means they're going down to here, which is 3.5% drop. Not the end of the world, but mathematically, that's a huge drag on the market. ABC moves, we've spoken about that a lot. You fall from point A to point B, you consolidate. You lose the consolidation, you drop. I'm not saying they're going to. That's what they're working with right now. Okay, so be careful with that bunch. Let's go to a 5-minute chart up there. I'll leave them up there on a 5-minute basis to see if they did base or not. Upside potential. Is the bottom in for the day? Maybe. Unless the XLF loses its lunch. So let's look at the credit put spreads from this morning. All right. So if you took the iron condor from this morning at the open, you're not losing money. The credit call spread played out perfectly. The credit put spread is still hot, but it's still statistically viable for you to win. If you took the second credit put spread, you're making a little bit of money. So the bulls are still cautious for today. My iron butterfly from yesterday is profitable-ish. Not enough for me to book it. $25. That's 50% of my risk. Yeah. I'm making 50% on the amount of money I risk, but if it doesn't fill at 14, I'm not making a lot of money. So I placed an order to close it at 1380, I think. So if we get a flash red today, I might get filled just in panic. Somebody might fill me in panic. 560, heaviest point of volume in the options for me. That's my own calculations. These two white lines, look how accurate they were. I drew them. I said, scribbly. Those are two targets when we were up in this box. Hatim, tell me you heard my credit put spread on Amazon. I don't think you should do both. I would pick Amazon over Netflix. Yesterday, I told you Cisco is being robbed. People that are trading Cisco are being robbed. You want me to show you a visual? Where is the SEC? Where is the SEC? My goodness. Cisco, for crying out loud. Like the most boring company on the planet. Well, in a good way. All right. So yesterday they gap down, not they gap down. They have an overnight tizzy. They gap up, they drop, they make a higher high. And look at where they are now. Below everything from yesterday, including the overnights. Why is Cisco, a company with financials this boring? Look at how boring these financials are. That's good. Boring is good. Is trades like Tesla. Why? Because market makers are making millions. Let's go, folks. Hey, Raul, thanks for being there. Only one guy? No. 15? I can only convince 15 to click over there. Can you review SAIC and Sarepta? We can review those. I don't know SARs. Let's start with SRPT. At least I can pronounce it. Oof, 23%. Yeah. So these are, is this an FDA thing? So that's why I don't trade this sector. Every day is like an earnings day. So technically, this stock is falling into a prior base, but it being down 24%, find out why. Have they been breached? Data, this, failure, whatever. Medical companies like this, biomedical, whatever this does, that's a pretty scary drop in one day. If I'm long this company, the time to panic is gone. Thank you. So be careful with that. Find out the reason, like know why it's falling. If somebody tumbles after a patient, yeah, that's serious stuff right there. You need to look into that and track it. What is the other one? SAIC. SAIC. Science application. What do you do, SAIC? Provider of technical engineer and enterprise information IT services. Couple $1 billion, so not very small. Going into a prior fail. I don't think it's easy to recover 124. To the government, yeah, that's not good. The government is in a spending mode. So I don't think I would want to be long here. And if I was long, I would exit as we approach 120. Oof, is that a new low of day? It is. My goodness. All right, so stuff is getting real, so not to cuss on YouTube. Alphabet doesn't like it. Okay, be careful trading these two stocks. Mainly defense on SAIC. Oh, load. And look what just happened. We're losing my brown box. The box stops moving right now. So in theory, the bulls need to get back above this white line. I'm going to change the white line to blue so that we can speak to it. It's still relevant. This one is not very relevant. It's just for resistance on the way up. They need to get back above the blue line. Yeah, it should be. Here, try it out. If it doesn't work, it doesn't work. No problem. Just Tesla chart? Okay. I shall do that. Got a young person in the crowd. That's pretty cool. So, in case you missed it, yesterday we discussed Tesla and we forecasted 228.3. We hit that this morning. Today, Tesla can slide. I'm not saying it will, but if it did what it does normally on any day in the last 30 days, it has room to go down to 213 today. There'll be support at 216, 217. So what I'm saying is if they lose 216, the last bounce is at 215. If they lose that, they're going to come down to finish these blue marks. So the blue is nothing but a copy of the yellow, which was a copy of something else. So they're selling rallies consistently on Tesla. I would not be long Tesla. I am long when it fell 15% one day for no reason. We sold puts at 60, was it? Or 90? Something like that. 90. So I would buy the shares at 90. That's my worst case scenario. And I won't start losing money until they assign me and it goes below that and I don't sell the stock. That's the only way I'm willing to go long Tesla right now. I don't believe in it as a car company up at this level, but I don't believe in the mockery that is going on right now out in the world. It's a very emotional stock. People love it and hate it, and people who used to love it hate it just because of a guy and his political aspirations. Silly. What happened to business and dollars and cents? Put your emotions aside, put your thinking cap on. It has support. If it loses support, it's going to 185-ish. Today, it can be at 213 with support at 220 and 216. Resistance at 235. Hi, Nick. I do need advice on NVIDIA. I am long. Yeah, I answered you over there. I am long 3 May 16 120 calls on NVIDIA, bought at 10:30. I also sold 2 December puts for $10. Okay. I'm thinking of creating a diagonal on my calls. Of course, I answered you over there. I would do diagonals, but you need to make sure that it's not too late. Like, are you down on your calls? The first thing is that May 3rd is not that far out of here. So make sure that your trade is a trade, not an investment. Selling the puts is an investment. I get it. I don't mind that. 100 is pretty aggressive for December, but at least you break even at 90 or 89. I'm okay with that. the May position, the buying calls at 120. You have to remember why you bought the calls. Why did you buy the calls? If you don't know why, don't be in those calls. You're just hoping. Know why you're buying calls. You were bullish, I know, but why? I thought it was going to go up is not a thesis. Why now? Right? I'm pushing back. So you would have a reason to be bullish via calls. $1,000 a call is no joke. Right? Yeah. So have a reason. If you don't have a reason, at least have the decency to make it a spread. Debit call spread, call diagonal, call calendar, whatever works. If you're down a lot on your calls, selling a diagonal now is going to be difficult. I would stay in puts if we make a lower low. We're going much lower. The QQQ puts I told you earlier, what was the number? 470, the most active puts on the Qs today. We'll see. 470. Okay, so you were gaming this talk today and tomorrow. So make sure you put some hedges. Selling a call against your longs is a good reaction from you. You're coming to me with the right question. The only thing I don't know is if you're already down a lot. So make sure you have stops. I don't know. That's up to you. I don't know the math on your position. I don't know what you, I don't have it in front of me. So instead of me going to figure it out, all right, let me help you determine it. Do you still want to be long? That's the question. What is your stop loss? How much are you down? Do you have a stop loss? All these are rhetorical questions you should ask yourself. I'm talking to somebody who has longs for May. You said May 3rd. Do you mean May 2nd? There is no May 3rd. You're down 40%, almost. May 16th. Okay. Um, 120. Okay, you're down 25%. Which calls you would sell? You would sell this week. Here's the problem. Let's say you sell the 121 call or 122 call. You collect $100. So now you paid $800 for a call diagonal. That is $2 wide. Not a good situation to be in, but it's better than nothing. The only one you can sell this week is 122, 123. That only gets you $90. It's better than nothing, 10% haircut, but be careful. My iron butterfly is still greenish, not very green. Yes, George, but you don't have a lot of weeks to keep selling. You know, $1,000 is what you need is a sharp spike. You should revisit the reason. What if another day passes without a good headline from this CGC week, whatever they're having right now? Would you stay in the call? Are you planning on staying in the call past this week? You're just telling me you want to keep selling. That means you've determined up is the direction, regardless of what this week is. Write down the reason you buy. Okay, so folks, do me a favor. Do me a favor. Never from now until the end of time, if you want to be serious about doing this as a full-time gig, from now till the end of time, never take a position without a specific reason and stick to that reason. Someone that says, I bought calls in NVIDIA because of this week's event for today and tomorrow, or yesterday, today, and tomorrow, and then says in the same sentence, or a minute later says, I want to keep selling diagonals, which means they want to hold it past this week, is someone that is not very clear on the reasons they own those calls. You tell me the reason was this week, and you tell me you want to sell calls for next week. I'm a little confused. I'm pushing back to have you keep the right reason and the risk on. It's not like you're not long NVIDIA. You're probably long some other stuff in NVIDIA too that you're not telling me. So you're like all eggs, all positions pointed in one direction. I'm going to offer you an alternative for next time. Why not buy those calls for $1,000 and invest $50 to $100 in a small debit put spread, shorter term? This way, if it had gone south, it would have brought you a few $100 that would have completely offset the losses you've had today. Iwar, yeah, no problem. Thanks for sharing. Ask me again for help. Which platform is best for spreads? Depends. Are you starting a new platform? The easiest one to open is tastytrade. If you want, I'll give you a link, a referral link. They will reward me, and I will share with the world. If Arlenis is here, I'll ask her to put a link. tastytrade is built like thinkorswim. It's pretty good if you get used to using the control button. You click on the bid or the ask. It's fairly simple. I'm talking about the desktop version. I have not traded the online version. It does have drawbacks. I hate a few things about it, but the one thing I love about it is how easy it is to open an account with no restrictions. Like they'll give you everything, and you don't have to lie. The other platforms, you have to lie. You have to tell them how many years you've been doing this and how many years you've been doing that. And if you're new, they won't give you an account. So how can I get years under my belt if you won't give me an account? Meta, it's not just falling. It says a lot about risk appetite. This was a stock that defied gravity and now is no longer defying gravity. It's somewhat concerning. Let's see how well could this have been a bear trap? Like if I was a market maker and I wanted to draw more people in, I would go just below and bounce. Look how they're bouncing between these two between these two dashed lines. There was there was a third line which I deleted, which was a little bit above the red line. It would have been perfect had I left it. This morning I deleted it. I think it was a 560.4. So it is very important for them to get back above the blue line for today. Otherwise, if they make a lower low, if they touch the white dashed lines, we're going lower, maybe 558. So this is the bull's opportunity to pop back above the blue line and hold. Let's see the soldiers that can help them do that. NVIDIA's off the lows. Google is off the lows. Maybe Amazon is off the lows. The problem would be Apple. So let's hope whatever comes out of Apple and the XLF gets into NVIDIA. If not, we're going lower. I'll tell you another ticker that could make a problem today, the XLV. If the XLV makes a lower low on its own self, that's about 9% of the SPY. It counts almost as much as the XLF. Yesterday, it was a champion, XLF2. Look at them. You can see them on here. Look how strong they were. This big green stick, this long rally. This is such a sham. How upset was I when they were doing this? I was like, what is happening? What are these fools doing? And I said, this needs to come down. There we go. Boom. Done. Uh, I mentioned, no, not too late now, Jack. I mentioned on yesterday, I said the last time we had options go against the grain in the way that they went Friday and yesterday, we had a reversion lower to fix that problem within a day, 2 days. And that happened on a Thursday, like a while back. By Monday, we had gap down. So this is the second day, right? Past Friday. And so they fixed yesterday problem, not quite Friday's problem, I don't think. Let's double check here. So this is the SPX, no lines, the Friday price action, and then the Monday price action. They priced out all of Monday and some of Friday. I would think that giving back half the rally from Friday is not a big deal, which is what we just did. We simply gave back half the rally. If we are bullish from here, this is how we do it. But now everybody's thinking, oh my gosh, the selling is back. If you're thinking that, you don't know this chart. It may be back, but this is the normal way of making a higher high. All you have to do is just hold 55.80, 55.90, come back and break today's high. Yesterday, we were all ready to continue on higher, right? Okay. So if we break yesterday's high, we can rally 3%. No problem. No problem. 59, 58.40, 5900. So let me see what the bulls have. Okay. Pradek, are you here? Yes. Jake, what's your email? Give it to me in DM here so I can send you an email. Actually, Jake from State Farm. No, Jake I'm talking to is like 9 feet tall, and it's definitely not from State Farm. Okay, so let me ask you something here in private, Jake, okay? Yeah, Pradek, one moment. Let me know if you have any questions. Right now, we're deciding whether they want to take back the day or not. By take that back today, just stabilize. Stop the bleeding before one of the ETFs loses lunch. So far, the ETF are holding. That's them. Meanwhile, the mega caps are not holding. So let's put the XLF here all by itself, maybe 1 minute. XLV as well. XLI is the industrials. XLP are the staples. Let's watch the staples for a little bit. Pepsi, Coke. Oh, okay. Yeah. No, for sure. All right. So I'll send you another email for that. That's a good attitude there, Jake. I like it. So look for an email, Jake, okay? With instructions. Okay. Drum roll. If you can hold the drum roll for about 15 minutes, that's an estimate. If you want a number, 5651.5. 5651.5 on the futures. If you have Thinkorswim, it's easy to see. That's yesterday's base. Your inputs, gutsy, but it will pay. If you're right, it will pay a lot. Be careful. The XLP can be a game changer. Now, what I'm excited about, it's excited is the wrong word. What I'm watching for is the behavior of the IWM. And that's not a today comment. The behavior of the IWM over the next few days. If they don't take out yesterday's high on the IWM, which is 206, the downside can be severe. Not any more severe than my target for it for the last quite a bit of time. They're taking their sweet time getting there. If we close minus 1%, that's going to shut up a lot of people in the sense where it's going to shake the confidence, wrongly so, because I just showed you normal, right? Eliminate the noise, eliminate the emotions. You went from point A to point B in 2 days, super strong. Giving back half is normal operating procedure so far. Freaking out now is premature. Getting disappointed now, oh, here comes the sellers again. Wrong statement. Premature. Why? I am not bullish the markets. This is a triple witching week, probably. And if not quad, what month is this? March. Isn't it a quad witching? And so there's going to be trillions of dollars at stake. Just read your Google trade. I was thinking about how could we structure a similar trade using the leap call and finance it by selling against it short term. Yeah, me selling a put is not the same as buying a call, Raul. I trust in the support. I don't know that there should be any upside. But you would buy a call at the money. Somebody saying, you know how I just said, let's go long Google. And how did I go long? By taking somebody else's money who's panicking today. That's how I chose to go long. Somebody today is thinking, oh my God, I need to get out of Google like stat. And somebody else is saying, oh my gosh, I want to be out of my Google at 100. They paid me almost $200 for me to promise to buy their shares at 100. So me saying it's not going to be much lower than 100 in December is not the same as saying I want to be long Google by a call. But that's the question. How can we structure a call diagonal? Okay. So let's go find that out. If somebody wants to put exposure, like if I created $200 for cash in my pocket, that's what I did. Can I layer on a call setup? So I would go to, they said leap. So I will go to March of next year. That's technically a leap. I would buy a, let's see, do I have a Google March call? I do. I would buy a call at the money, which is 160. It cost $2,300 almost. Okay. 22, I'll say 23 for round numbers. So that means I'm going to start selling calls against it to create income from that. April 17th would be the one I would sell. But the thing is, it's only $100. So if you go to April and you sell the 175, which is at the upper end of the straddle after a big drop, not ideal. You would end up selling it at a huge discount, and it brings you $100. So if Alphabet rallies to 180, you're screwed. You're long at 160. You're out at 180. At 170, and so that's $10, and you paid $2,000 plus for it. It's not a good situation. I mean, along the way, you will be able to exit the whole position. So if you want to capture upside, unfortunately, you will have to sell enough naked puts to finance your calls throughout time. So not an ideal time to layer. You can buy the call, but don't sell anything against it for another rally. Yes. Did you send me an email with that? You did not. Can you please send me an email with that, please? And thank you. So I can put it on my to-do list. Jake. Here's my email. Otherwise, I will forget. Plus, this way I can copy paste. NVIDIA is recovering, approaching 118. Incredibly important for that to happen. 118 is incredibly important. Here is our blue line. They're doing the right things. They're bouncing off of a must-hold level. I would not hold puts. Okay, let me rephrase. When we approach 550.6 again and 560, 560.6 and 560, I would exit puts, buy calls until they lose the floor. So if you just bought puts, okay, I see what you're doing. You got to see if we're allowed to come back down to 559.60. If not, we're probably going to go up to the white line again. The easy downside has happened. You should know that. Anybody that just changed their mind, oh, okay, here comes the sellers, is not actually looking at the price action. I do have a Tasty Trade referral link. Just give me a minute. I'll give it to you. Atlan, there you go. Which strategy is safer? Buying stocks and selling, or option secured puts? Okay, so I prefer selling puts to buying shares. This way, I am buying shares, maybe. And if I am buying shares, I'm leaving room for much, much, much lower levels. So, from a safety perspective, it is safer for me to buy shares lower, which means that I would prefer selling puts. There's no indecision. They're just back and forth. They're moving levels. So this is where the fight is right now. 559.80, 560.80. You can still short one more time if they bounce to 560.80. So let me give you a visual. If this bounces to here, you might be able to do this one more time. And then the bulls need to do this and stop messing around already and get up here. If they don't take this green one, they're opening themselves up for a lower low, and that would be a bear trap. I'm not sure you can. These labels. Yeah, I would not hold a put below the red line or at the red line right now, unless this is a runner that you're banking on getting to 558. It is a possibility. Okay, the 558 is it a possibility? Yes, but there's plenty of support, but it is a possibility. So holding a runner, yes, you can, but buying a put here is asking a lot. The bulls need to do that green squiggly. The blue, I get, it's normal. If they lose this dotted red line right here, right now, the bulls are toast. Like they're exhausted. Weird. They don't have any soldiers. Like somebody step up. The XLI now. Oh. What am I going to say next? That guy. This is a champion from yesterday, the XLV. Pfizer, Lilly, UNH, Merck. They move fast and they are heavyweights. Drum roll again. Coca-Cola, die, Mo Flicker, die, you sugary beast. In case you don't know, I'm holding puts in Coca-Cola. A naked put position. Oh, thank you so much. Harbor Freight having a sale. Can you believe it? Inside joke. The reason why it's not easy to hold puts here lies in the chart on the right side in the middle. I'll expand it. So yesterday, Friday was incredibly bullish. Boom, market went to high heaven, right? So from the Thursday lows to the yesterday's highs, we rallied 3.5% on the S&P. And this is also 3.5%. Look at this candle. Yesterday at the open, we had an explosion in the XL, blah, 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 blah. I think banks, Berkshire was a pretty big component of that one. Let's verify. Yes. So we are now at the base of the largest green candle in weeks. This is the largest green candle in weeks. I'm looking back. Show me a larger green candle. Like not only long, but the width of it denotes volume. So this was something else. Tell me when we lose it. I'm going to put an alert and say, what the heck? If we lose it, the markets are in deep trouble, which is why it shouldn't be easy losing this base. Here's a headline that will come out. This is how they spike on the headlines from Russia, Ukraine. Sources close to the matter report progress in talks between Trump and Putin. There's hope for a deal. Whee! That's funny. Look at it. Look at it. Something is coming. Move coming. Higher lows, lower highs. These are 15-second charts. 15-second charts. 1-5 S as in Sam. Look how narrow they've become. Headline imminent. Headline imminent. I don't know which way, but we're not going to stay here for long. All right, let's look at the accounts. The accounts are green. Yes, we are. Boeing. What the heck do I have in Boeing? Nothing. A short got worked out. It's only 7 cents. How much are you holding up? $1,400 for 7 cents and 30 days. We shall close that. Oh, that is not 7 cents. It says credit. That cannot be credit. Let's make it a debit. I want to close a sold call and it's not letting me. The quote is just way out there. We'll leave it. Actually, it's closed. Never mind. I'm closing a couple of wins from before. It's these are done in a relatively small isolated account, so it frees up a lot of credits. So I'm free to do some other stuff with the money, you know. So Walmart, I sold a naked call for December at 120. It was almost $300. That was 46 days ago. It is holding up $3,500. I'm going to close it. $80 is not worth it for that kind of cash. Okay, I did it in a small account and frees up $800, almost $900. It's a no-brainer for me. I don't know why you guys are. What do you mean, Maria? What's happening today? Just explain to me. Just tell me how you come to this conclusion. What makes you say it? Is it the fact that we're red? What makes you say it? We had 3.5% rally unobstructed by one red tick, and we're just having one red tick. No, what's going on is Nvidia has something going on this whole week, I believe, and there's no one knows. And then tomorrow is the Fed day. They're meeting today, and they're meeting tomorrow, and tomorrow they'll come out and tell us what they decided to do. So there's that. And then somebody else mentioned that there might be some political comments from. I said there should be a headline coming from the chart. Like the chart is coiled and it's wound tight. If that's what you heard, maybe at the tail end of my comment. I don't know what's going on. I'm speculating that people will say what I just said. If anybody followed me into, look, they're trying to recover this blue line. If anybody followed me and you see this one, I said if we pop up to here, I would buy a put. I can make money off of this. That's what just happened. That's what's happening now. That's this slide. There's not enough money for me to make money from here to here unless you're super fast. If you're not super fast, like Ryan could do this, Linda could do this. It's just not my thing. But we'll see how long they take it. But see, the price action is super accurate. There you go. Lock in your profits as you're approaching these ticks. Like I would be out of that put right here because they're probably going to try to bounce again. If you don't know what's going on, let me draw your attention. There you go. Nice work, Linda. High five. People on YouTube, you don't know what's going on. I have 300 people over there. In case you don't believe me, I'll show you. That are actively trading, but they're members, so they have write-ups and everything else that goes with it. So look, that says 268 minus the call-ins. It's closer to 300. Trust me on that one. So Linda just out. So she took a put up here, like I said on this one, and she made money with it. That happens all day. I'm not going to believe this, but of the company that gives the IVs. Okay. You should do that. You went long the Qs. That's a lot of conviction. 1000%. I don't understand. Is that a number that you profited or you're 100%? So you went long big time on the Qs. Is that what you're saying? Okay. Okay, so I don't understand your statement. Please state it again. Give me a full sentence in one entry. If anybody followed me into selling a naked call on Walmart, it paid. It paid hundreds of dollars. It locks up $3,000. I will reshort on a rally. Let's show you the visual on why I shorted. There is no way Walmart should be leading a stock market rally that's based on tech. And if it bounces, I'll short it again. 40 days ago was when? Oh my gosh, okay. Ooh, that's not pretty. Okay, so what I was starting to say, this is the Head and Shoulders that they lost earlier today. You see that? 560.6 ish, 560.5 is the neckline. My little blue squiggly is this one, is the neckline. They're trying to recover it. That's the, what did we say, gargoyle? That's the gargoyle that we threw in the water and it's trying to breathe. And if it cannot breathe, it's going to go much lower. Tom, I bet you anything we will not learn anything new. I guarantee it. And I do agree on the DAX. I'm short and struggling. The DAX is shortable. I'm confident that a lot of QE means that yes, exactly what I'm saying, Tom. A lot of QE means they're desperate, just like Chinese stocks. If anybody chases China stocks because of artificial spending, it's a placebo effect. It will die off. Not a placebo effect, a temporary effect. Can you imagine? You know, oh, business is terrible. Let's throw money at it. Why is it terrible? We don't know. Let's throw money at it. That'll fix everything. It won't. Nice bounce on Google. By the way, if I get a quick $100 on Google, I will take that trade off. A quick $50, $80. I don't have to hold it for from now until then. It's already up 8% of maximum gains. So it's like $13, $15 cheaper. It's like 147 now. It doesn't make it a bad deal. It just makes it that it's a quick buck. I would have sold 100 contracts down there for me if I wanted to buy 1,000 shares of Google at 100. Who wouldn't want to if they have the money? It has the best financials out of all of them. If you liquidate the companies, all the mega caps, it will be left with the most cash. If you just liquidated everything, not to mention the intangible value of the platforms that are not monetized that they own. Then the car company or whatever. Maybe that's on their balance sheet. I'm not sure. Is Waymo on their balance sheet? It must be somewhere. I don't agree. They're reining in spending. Moving it where? They're reining in spending. We had the fastest rate hike cycle in history, recent history. That's reining in spending in the country. Yeah, of course we can disagree. How about we can say it differently? We don't have a QE and they do. Fair? That is a fact. We can't disagree on that one. That's a fact. They have a QE and we don't. I understand, Tom. This is already too low for the Bulls. The Bulls have already lost a big step right here. Um, now is like DEFCON 2, is it? DEFCON 2 for the day. I would not hold my breath for this green thing here. Now this green thing just gets you back to the fight line. The XLV did tick lower, but it bounced off that lower low. So what I'm concerned with the XLV is them holding this line from this morning. Like if they go back and make 146.1, they commit to going to 145.8. So them sliding from here to here, not the end of the world, but it's just an extra, 0.01% drag on the SPY. And will not help these guys hold the large green candle. Let me open up another another window that you guys don't have. How about we watch the cues? Oh, cuidado. The cues. The 15-second is the QQQ. Earlier, they averted 472.6 situation. Maybe they still want it. So 472.8 doable on the Qs, which is bad news. 472.8. Okay, Eddie, thank you. I don't know how they could have made that mistake. Lordy, lordy, lordy. Thanks for the heads up, man. In case you're wondering, the Benzinga team sent out the wrong headline. Uh-oh, the drum roll is going the wrong way. 5651.5 ES low from yesterday. 5651.5. That is $4 lower than here. So 0.4 SPY. So 559 would mean we triggered a new low. I would hold the short because they made regress. They needed to hold 560, actually a little bit higher, but they couldn't. 558.8, where we are. If they get to the white one, it's too late. I think we continue on lower. Let me check the options chain. Has not changed. We have support and some upside pressure now. On the QQQ, the heaviest put transacted is not the heaviest. The second heaviest put transacted is 470. 470. Okay, the highest dollar amounts are higher, so there might be a spring back, but there needs to be a headline for it. If you have runners, leave them. You might get a nice whiff lower. My Iron Butterfly is not changing its price. They're still in denial. Somebody mentioned that calls are still priced too high. That is misplaced hope. And that is emblematic of a market that is in denial, that there just might be a continuation lower. Oh, what? Well, this is a bear trap potential right here. Okay, if the calls are priced higher, that means they know they want to trap some bears. When you make a lower low, you have one chance to get back onto the track of that green thing and trap the bears. If you don't do it, then it's just we're going to 558 or lower. Well, you're making money. All you need to do is just be aware of it. That's it. You need to be aware of this potential. So if I was a market maker and I have a lot of supports from puts and I have a very sharp line like this, I play possum. I go to here, I go, oh, I'm injured, boop, and then stop here. But they just might be spent. We'll see. This is not signaling bear trap. It is the big candle, but they're making and this one also. So they just might be legit tired. But be aware of it. Oh, we just made a lower low on the ES. So I still don't understand your statement earlier about we never finished the conversation. This green M on my screen says we might go to 559.80. Super important that we do. Just below that green line. I did not draw that green line. So this is the squiggly that kind of was important to recover, and they haven't. This is another area of resistance now. And if I were to put one, it's right here. So it's already there, the yellow line, the green line. Yeah, oversold is okay indicator. I don't love it. This is it right here, right here, right here, right here. This is your fight, bulls. This is your fight. And the XLF is going the wrong way. That's the big heavyweight XLF. Berkshire, flat. Berkshire was up a lot this morning. Now it's flat. I am short Berkshire and I'm not backing down. That stock needs to come down. I'm long this week, short 6 months out. 6 months? No, 60 days. Nope, 94 days. So June. When in doubt, folks, when in doubt, I suggest you use levels and nothing else. Levels, levels, levels. Like if you're confused between this study and that study, just ditch them all and look left. As Manal says, look left, trade right. Oh, love it. Oh, such an epiphany. It'll be on the website. That is not a song I thought you'd know. Hey, you would say the same thing if I knew that fan thing yesterday or 2 days ago. You would be surprised, would you not? You would. Where them fans at? That's the one. US oil. That ETF tracks what? CL has support at 66.6. I still do not get the 561.2 line, but I get the green slope. 561.2. Oh, that was from earlier. I don't remember why we did it. Let's double check if I can. We've been dragging it for a minute. Okay, that's the top of this candle, I believe. At the time, that was the largest candle. Oh, no, no, no. I know what that was. Um, they were downside targets from the red harmonic. Yeah. So now it makes sense. All right. As far as trading the dip, I guess somebody could try to take another put. And if you take a put here, you're saying they're going to come back down and I'm going to make money. I don't think you have a lot of room without a breakdown. I love this being a bear trap. This fits. It fits what you guys have been telling me about the premiums and the calls. It fits the things that are falling into support. Like this is 30% of the S&P falling into pretty big support. This is the other 30% of the S&P being shellacked and have stabilized. So the low of the day may be set. Let me check on the credit put spread from this morning. The credit put spread from this morning is still alive and statistically viable. The delta of the sold put this morning, 5575 SPX for today, is still 0.2. That means the person that sold it, us, is still at an advantage. The trade itself is still red-ish, so it's okay. It'll work out. Even the second credit put spread is still the same price. So they're not out of the woods, the bulls. But there is evidence that there is support, and any further lows are not going to be easy. Now, I did say there might be a headline because of the price action is too quiet or pointy. It's no longer pointy. Look at my screen. When I said imminent headlines, we were doing this. And then we did this. Now we don't have that. What we have is continued consolidation sideways after a drop. If we lose the consolidation, we do this. So we're not saying anything new, except that the imminent headline scenario is no longer imminent. We just have a stabilization zone that they better not lose. Yesterday, we broke out of my brown box to the upside, and we took all of it almost. Today, we lost the brown box, and they're in the process of trying to recover it. If we make a lower low, we're probably going to come down to 558 or lower. But that's a big if. The TLT is range bound, I told you yesterday. Until tomorrow. Tomorrow it'll go crazy. You can take puts here, and the target would be 559.60. $559.60, maybe 50. I'm not thinking that. I'm looking at the red W that formed. That would be target 1-ish, maybe 1.5. So these red W's that you see here, they're called harmonics. They come in multiple shapes. The one shape is like a W. Those are bearish because that's the byproduct of it. If you think about it, this is nothing more than a rising wedge playing to the downside, which has been a solid money-making idea for me for the last 2 years. Rising wedges create this potential. So that would be the right side of the W. They need to hold halfway of this drop. Like here, they didn't. They need to hold, the bulls need to hold halfway of this drop. They need to hold 559.80. Now, the squiggly green mark came from a lower low. That was a bear trap. And if somebody bought puts at the white line, they're stopped out now. Fast trades, they should have stopped out now. All right, thanks, Braddock. I appreciate it. So taking out 560.8, which means making progress over this, taking out the tip of the green one, will get us above the white one at the top of the purple box. So the purple box is really old. That's like last August. The yellow line is not really old. That's yesterday. I drew it today, but it's the scribbly from yesterday. So getting above the white line and getting through the yellow line are two different matters. The options say if the bell rings right here, I'm fine. In fact, it'll be perfect if the bell rings right here. That's why my SPX did not get any more profitable than it is, like $15. $15 is a 30% profit on it, but it's $15. I keep saying it, comma, it is 1000% false. Anybody that tells you they did that is lying to you. Tell them to cancel and see if they show up. Okay, So the easy bounce has happened. There's a lot of potential. For example, 118 NVIDIA should be difficult, but it has not respected it in the past intraday. They go through back and forth, and it's just not as sharp as I make it out to be, but it is. On a higher time frame, on a slower time frame, it's extremely important. But short term, they don't respect it. They cut through it down, they cut through it up like it's butter. Look at Google, cut its losses in half. Um, what a stupid market. I love it. It makes making money so much easier. Like we're up 12% on the puts we sold for December. Imagine if we had bought calls, right? But we took a lazy way of trading the dip. For December, we're up 12%. That's how stupid this market is. You're shifting the question. If someone is in the Discord, they do not have access to the live room. So if someone says they canceled Benzinga because they have access to the live room from the Discord, they are lying. It would be no different than them saying they canceled Benzinga to sign up to TradeTix. Or TradingView or TrendSpider. The Benzinga content is not in the Discord. The access to the live room is not in the Discord. You guys keep asking the same questions, and I'm giving you the same answer. Oh my God. Okay. All right. I'm going to kill the stream, and I have a debate coming up with somebody. We're going to end once and for all. Okay. We're ending the stream. Thank you very much. I appreciate your support.